evening to you, and welcome to tonight's presentation of the Wall Street Education Expo. My name is Bill Corcoran. I'll be your instructor, your guide, your host, your presenter as we move forward with our presentation tonight, talking about the stock market and all things stock and options market related. I appreciate each and every one of you coming out tonight, and I appreciate you taking the time to come and learn a little bit about the stock market and some of the opportunities that present themselves in the markets. As you guys know, the markets have been very active lately, and we've seen a lot of activity. January is shaping up to be the worst January on record in the stock market. We certainly had the worst first week of January of 2016 as the market sold off, and there's no question that a lot of people have suffered as a result. And there are a lot of people who are actually making money off of this sell-off in the market. It's time that you learn to do the same. It's time that you learn to be on the right side of the market with regards to trading and investing. Ladies and gentlemen, my name is Bill Corcoran. I'm the CEO of BetterTrades, and I'm going to be spending some time with you guys here this evening. I do want you guys to be aware that I am not a registered broker-dealer. I am not here to give you financial advice of any kind. What I'm here to do is to present you with some strategies, some descriptions of techniques that are used by market participants to both protect themselves as well as to potentially make money in the markets. We're going to be talking about different types of securities, different kinds of positions that may be appropriate to the discussion regarding the strategy. In fact, from time to time, I may even refer to examples of real-time unfunded paper trades that are used purely for illustrative purposes to demonstrate and illustrate the strategies I'm going to be sharing with you. Also understand that everything that I teach is education in nature. It is not tailored to any specific individual, even if I was to use your name in the course of the workshop. And I am not under any trading restrictions. Now that we got that taken care of, let's talk a little bit about this workshop. Ladies and gentlemen, if you've ever been to a financial education workshop, you know that a lot of them have things in common, and a lot of those things that they have in common are not necessarily things that you're going to get all excited about. Most financial workshops, the instructor stands in the front of the room and tells you all about how great they are. This workshop is not about me. This workshop is about you and your success. This workshop is not going to be like the other workshops. We're going to spend some time talking about some strategies. I'm going to show you some things. I'm going to share some interesting ideas with you, but this workshop is about you. It's not about me, and we're going to keep that focus throughout the workshop. I certainly hope that that sounds okay to you. A few questions first. Who should this workshop be about? We just covered that, right? Not about me, it's about you. Let me ask you this, though. Why are you here? What is it that you are here to learn about? What about the stock market interests you? Why are you here? So there's going to be some people in here who undoubtedly are going to say, I'm interested in learning to make a little extra income. How many people in here would be interested in learning how to make a little extra income? All right, quite a few of you. How about this? How many people in here would be interested in learning how to potentially replace their income? Anyone interested? All right, so a few people there interested in replacing their income. How about this? How many people in here are just interested in learning to protect what they've got? Given what the markets have been doing, is anybody in here interested in just learning to protect the income that they've got or some of the things that they've got going on? All right, very good. So if you are here because you want to learn how to make a little extra income, or you're interested in potentially learning to replace your income, or maybe you're just looking at what's going on in the market and you're saying, well, I just need to protect the income that I've got or the portfolio that I've got, that's what we're going to be here to do. We want to address what you are here to learn. What you're here to gain from this workshop is education. What are your investing goals, right? And that kind of gets back to, I'm looking to make a little extra, I'm looking to replace what I've got, or I'm just looking to protect what I've got. Let's jump right in and talk about the stock market. What is a stock? What is it when you're buying a stock that you're actually buying? You are actually buying a piece of a company, right? Anybody ever see Shark Tank? All All right, well, how about this? Why buy a stock? Ever see Shark Tank? Really, the reason that we buy a stock is the same reason that those investors on Shark Tank go out and invest their own hard-earned money into these new companies. They're interested in that return. They want to see the growth in the company, and that's why people should buy a stock. If you're interested in buying a stock, it's because you're interested in the company. And ultimately, that means you are interested in making money. That's what the guys on Shark Tank are doing, and that's what we're going to do as well. How do you buy your stock? Well, when we go into the stock market, we look at it, we'll find that there are two prices to the stock. In this example, 105.50 by 106. One is called the bid price, and the other is called the ask price. We buy at the asking price. We sell at the bid price. The easy way to remember this is that we always get the price we don't want. So if we're buying a stock, we've got to pay $106 a share. If we've done our research and we like that company and we think this is a company worth our investment, that they're going to grow and therefore their stock price may go up, we would buy the stock for $106 a share. The guy in the middle, the market maker, he's the one who makes that 50-cent difference. The nice thing about that is that by having a market maker, we always have somebody who will buy our stock from us when we want to sell it, and somebody who we can buy our stock from when we want to buy it. A ready-made market. How about if we start thinking like a rich person? How many of you would agree with me that a rich person probably thinks differently than everybody else? Right? And one of the reasons that they do is they understand the concepts and the ideas taught in Napoleon Hill's book, Think and Grow Rich. If you've ever read the book, you know that this book is in fact it's a manual, a how-to manual on growing rich, building real financial freedom. Written by Napoleon Hill. Napoleon Hill went out and interviewed 500 of the wealthiest industrialists of his time. And he looked to see if there were common themes between these people, if they had ideas or practices that they all engaged in, and he found out that they did, and that those ideas were quantifiable, that he could even write about them in the book. He wrote in Think and Grow Rich the process by which you too can begin to think like a wealthy person. You see, one of the things that wealthy people do is they don't buy retail. We're not going to see Warren Buffett go out and buy stock at that $106 price. You see, savvy investors buy their stock at a discount. They know how to go out and buy the stock at a lower price, which ultimately means they get a higher return. Anybody ever hear of buy low, sell high? What if we buy lower? That means we get a better return on our investment, a smarter way to buy our stocks. What if there was a way to get the market to agree to sell you a stock that you wanted to buy, but at a lower price? Would you be interested in that? What if you got paid to wait for the stock to go lower? Would you be interested now? I would. What if you get to keep the cash if the stock did not go lower? Wait a minute. You mean to tell me that I'm going to learn to buy the stock at a lower price and get paid to do it? Yes. It's called buying on contract. In the market, you can enter a contract with the market. It's an agreement to buy the stock at an agreed upon lower price at some point in the future. If the stock goes lower, you get to buy the stock at the lower agreed upon price. If the stock does not go lower, you get to keep the cash. Let's talk about words versus pictures. Are pictures easier to learn from than words? We've all heard that a picture is worth $1,000. You got to make sure you're listening to the right people. Well, let's look at this picture. What do you want to pay for the stock? This is a stock some of you may have heard of, Apple, right? Stock was trading on this trading day at about $100.73 at the close of the day. What do you want to pay for it? I mean, you could go out and buy it at the retail price of $100.73, but what if we agreed to buy it for $96? I like that. It's less than $100. Well, we could go out and buy the stock for $96. We'd have to wait for it to get there, or we could get into one of those contracts I talked about and get the market to pay you, in this example, $1 per share just to wait around for the stock to go down. Would that excite you at all? Well, it would if the stock went down. In this example, 4 days later, the stock did go down below $96 a share, and we got to buy the stock for $96 a share. Remember, it's a stock that we wanted to buy anyway. We see value in it. We think that the stock may go up. We got paid $1 to wait for it. So we didn't really pay $96 for the stock. Our cost basis was actually $95 a share. Check this out. 7 days later, the stock has rallied from $96, where we bought it, to $105.22. In other words, we could sell the stock at $105. If we bought it at a cost basis of $95 and we sell it at $105, we made a $10 profit in 1 week. Actually, you could sell it here and make more than the $10. I'll talk about that in a minute. How about them apples? You guys like that? The stock, by the way, is Apple, so yes, the pun is intended. The rich are getting richer. Anybody ever hear that? Well, this might be why. You see, in this example, you bought the stock for a cost basis of $95 a share. It goes up to $105 a share, you make $10. The guy who bought the stock at $100 and it goes to $105, he only makes $5. That's the difference between the mindset of the wealthy and everybody else. You see, by buying it smarter, we get to make more money. What if you don't get the stock? Well, you want to buy the stock at a discount, $95 our cost basis versus $100. You get paid to wait. In this example, $1 per share. That's $1,000 for every 1,000 shares that we're willing to buy at that lower price. Well, if the stock does not go lower, we don't get the stock, but we still make the $1,000 on the 1,000 shares. Wait a minute, you mean to tell me that either I get the stock or I get the money? Yes. Now, I know what you're going to ask. If this is so great, why aren't more people doing it? The answer is, well, they don't know how. You see, education is the advantage. It is the educated, the knowledgeable trader and investor who has the skills to be able to do this. If you're not one of them, let me ask you a question. Is not knowing how to do this costing you money? Is it costing you a lot? See, your life does not get better by chance. It only gets better by change. You've got to create that change. Coaching is going to be one of the secrets to success in any venture. If you like the idea of buying stock at a discount, but you're struggling to understand the execution and actually how to do it, it's okay. Everybody struggles at first. But how are you going to learn it? Through mentoring. What do you do for a living now? Maybe you're a police officer, a firefighter, a teacher, a nurse, a doctor. Were you new at it? At one point, you were new at whatever you do now. How'd you learn to do that new job? You're going to need a coach, right? You had somebody mentor you. Well, you're going to need a coach and a mentor for the stock market. Every expert was once a beginner. Coaching is exactly what we do. The market can be a scary place if you're new. Heck, it can be a scary place if you're not new. Our coaches are there for you. Coaching, teaching, mentoring, guiding. It's what we do every single day. Are you ready for more? Let's learn some more strategies. How about when it comes time to sell our stock? When do we make our money? Well, we make our money when we actually sell the stock. Remember that buy low, sell high? We talked earlier about buying lower. How about if we learn how to sell higher? Again, remember guys, these are the secrets of the wealthy that they use to buy their stock at a lower price that they want to buy it at and sell it at a higher price that they determine where they want to sell it. Let's see how they do it. When do we sell the stock? Well, what regular people do is they wait for the stock to go higher. What about those savvy investors, those people I talked about before? Do you think they're getting paid to wait? Truth is, they are. They're getting paid to wait for that stock to go higher. Are you getting paid to wait? If the answer is no, then we need to learn how to do that. Get paid to wait. Because if you're not getting paid to wait, you're probably working hard for your money. You need to stop that. There's only so many hours in the day, and you're literally trading your hours for somebody else's dollars. The sad part is that the day only has so many hours, and you're never going to get those back. The dollars, you're going to spend those. How about if we put our money to work for us? Want to get paid just for showing up? I'm going to teach you a strategy that does exactly that, a smarter way to sell the stock. What if we could get the market to agree to buy our stock from you at a higher price? Anybody interested? What if you got paid cash to wait for it to go higher? You should be more interested now. What if you got to keep the cash that the market paid you even if the stock price did not go higher? If that doesn't get you interested, if that doesn't get you excited, ladies and gentlemen, if that doesn't light your fire, you got wet wood. That should get you excited. Let's learn how to do it. Oh, wait a minute. There's going to be some of you out there. You're going to say, Bill, I don't know. This sounds too good to be true. If I'm buying lower and getting paid to wait and selling higher and getting paid to wait, it sounds like a whole lot of me getting paid to wait, and I'm keeping the cash if the stock doesn't behave the way it's supposed to. People out there will literally tell me, Bill, this sounds too good to be true. It can't possibly be that that's the case. What I'll tell you is this. You need to take a look at it. Learn it, right? Don't believe everything that you think. I'll give you an example of what I mean. Many of us in here were taught to think a certain way by our teachers, our preachers, our coaches, our parents, and our grandparents. And that thinking may be preventing you from finding that real opportunity in life, what I call stinkin' thinking. I've got an example right here on the board. I'm going to go through with you and show you just how dangerous that stinking thinking may be, how it may be changing your behavior when it comes to trading and investing in the markets. I've got an example of a stop sign. We can all see that the stop sign is red in color and that it has 8 sides. It's an octagon shape. That's what we've been taught. It's red. It's an octagon, 8-sided. In your mind right now, I want you to now picture a yield sign. A yield sign. How many sides are there on a yield sign? Anybody who's ever driven is going to be able to tell you a yield sign is a triangle. It's got 3 sides. So with 3 sides on it, let me ask you this. What color is a yield sign? It's always interesting when I ask that question. People will tell me a yield sign is yellow. Obviously, a yield sign is yellow, and some of you answering that right here in class. Yellow is what some of you are saying. Ladies and gentlemen, a yield sign is actually red and white, just like a stop sign, and it has been for decades. But most of us learned to drive at a time when yield signs were still yellow, and it's stuck in our head. Despite the fact that you've been driving by the evidence to the contrary for decades, your mind goes back to what you were taught as a young person. That is the danger of stinking thinking. That is the danger of crossing your arms and saying, oh, that sounds too good to be true. I'm not going to get involved. That's how opportunities pass you by, ladies and gentlemen. Do not allow your yellow yield signs to hold you back from the opportunities that could literally change your life if you'll just open your mind to it. You see, we can sell our stock on contract. We enter a sales contract with a market maker. It's simply an agreement to sell our stock at an agreed upon higher price at some point in the future. If the stock does go higher, you're going to sell it at the higher agreed upon price, but if it does not go higher, you get to keep the cash that the market paid you for that contract. There are people doing this all the time. Let's take a look at a picture, because by now we all know that in the stock market a picture is worth thousands of dollars. Does this look familiar? Anybody remember this one? Oh, this is that same chart we talked about earlier. We bought the stock at $96 a share. Really, we paid $95 because we got paid to wait. But let's sell it for more. We could go in and put in a contract that allows us to sell the stock to the market at $105 a share. The beauty of it is they're actually going to pay us, in this example, $1 for that contract. We'll get paid $1 to sell our stock at an agreed upon price of $105 a share. Now what do? Well, now you're getting paid $1 per share to wait for the stock to go up. That's $1,000 on 1,000 shares just to wait. What could you do with an extra $1,000? What about $1,000 in a week of time to wait? It's called passive income, ladies and gentlemen. Passive income is money you don't work for. It comes from an investment. It's how you can retire. When your passive income exceeds your cost of living, you are retired. That has nothing to do with your age. In this example, the stock does go up above $105 a share. 7 days later, it's trading at 105.22. With the stock above 105, the market maker buys the stock from you for $105 a share, and you make the $10 of profit in 1 week. Actually, you sold the contract for $1, so you're going to make more than $10 a share. If you think the cost of education is high, let's take a look at the cost of ignorance. You see, we take a look at that trade. The novice goes out and buys the stock for retail price, pays $100 a share, waits for the stock to go up, sells it at $105 a share, the retail price, and makes $5 a share. That's not too bad. A 5% return in a week is a decent rate of return. But let's take a look at what the expert does. The expert buys the stock for a wholesale price, pays $95 a share cost basis, sells a contract on it for $1, gets paid to wait, sells the stock for $105, makes $11 a share. Guys, that's an 11.5% rate of return. Our expert is outperforming the novice in the market by, well, double, more than double. What if it doesn't go up? What if the stock doesn't go up? 7 days later, it's still trading down here around $96 a share. Well, with the stock below 105, the market maker is not going to be interested in buying the stock for 105, so we don't make any profit on the stock. But you sold a contract for $1. And so you still make that dollar, that $1,000 on 1,000 shares. Now look what it's costing you. If that stock doesn't move as a novice, you buy the stock retail, you pay $100 a share, you wait for the stock to go up, the stock doesn't go up, you wait longer, you get a 0% return, plus you've lost a week of time. The expert buys the stock at the wholesale price, pays $95 a share, sells a contract for $1, gets paid to wait. Stock doesn't go up, makes $1 anyway. That's a 1.05% rate of return, and the stock didn't behave itself. Still has the stock, can sell another contract. Ladies and gentlemen, it's all about education. What about this? Is it costing you big time? What if you're not participating at all? You go to a job that you hate, you never buy any stock, you won't learn how to invest, you watch the market go up, you wait longer, you watch TV, you get a 0% return plus years of lost time, can't retire, and work until you die. Or, as an expert, you get educated, you get paid to buy stocks, you buy stocks for less, you get paid to sell your stocks, and you sell your stocks for more. You get paid if the stock doesn't go up, and you generate passive income. Is retired. Ladies and gentlemen, it is your choice. You decide where you want to be. What if you already own the stock? Oh, what about this? If you already own stock, anybody in here ever bought a stock? Either yourself or if you've got a financial advisor who's doing it for you. If you've ever bought a stock and put that in a portfolio, if you still owned it, would you like that stock to pay you monthly? I'm talking about actually getting paid for owning the stock, and no, I'm not talking about a dividend. What if you could get paid weekly? It's a strategy called renting out your stock. Using a variation of what I just taught you, it is possible to create potential rental-like income from stocks that you already own. Now, it only works on stocks, doesn't work on mutual funds. Let me ask you this. Would it be okay if it took you a few days to learn how to do it? Now, you might ask, but does it work? Guys, the market is not a get-rich-quick scheme. You can get rich, but first you have to change how you think. Then you're going to have to change what you learn. Results always follow education. Same thing happened to you when you were in college, did it not? If you went to college, you paid money to go, you paid money to learn, but it only works if you do. And the same is true for the stock market. The work that you're going to have to do is to learn the information. We can teach you things like huge returns on small money. The problem with buying a stock is that a stock can be expensive. Not everyone has that kind of money to start out. What if you could trade and invest for less? Well, those contracts we talked about earlier, yeah, we actually trade those. And I can teach you how to do it as well. How many of you be ready to learn more about trading those contracts for a whole lot less money than actually going out and buying the stock? If you're ready to learn more, let me tell you about the First Step class. At the First Step class, we teach you how the stock market works, how to read stock charts and see when a stock is ready to make a big move, when and how to buy a stock at a discount, how to sell a stock at a higher price with a contract, how to manage risk, renting out your stocks for passive income, and trading for pennies on the dollar. Most importantly, you're going to learn how to create a winning trading mindset. First Step workshop we teach all over the country. It is a live in-person 2-day workshop that normally retails at $1,495 a share. $1,495 gives you an opportunity to come in and learn this class. Now, we don't have any scheduled right now. In fact, what we did is we went in and we recorded the First Step workshop and we make it available online. That $1,495 workshop that people have paid money, $1,495 to attend, you're going to get it at an amazing discount. Not $1,495, not even $795, ladies and gentlemen, for coming out and joining us today. If you enroll in the recorded version of the First Step workshop, not even $395, check this out, it's going to blow you away. And you enroll right now. I'm going to give you 7 days access to the First Step online recorded class on demand. You'll be able to watch it whenever you want, wherever you want, as long as you have an internet access for $7. You heard me right, $7. The entire 2-day stock and options First Step course brought to you, recorded, and available on demand on the internet for only $7. If you don't love the class, I'll even refund your $7. But ladies and gentlemen, we are in a scary market. Things are not going up, they are going down. And if you do not understand how to read this market, how to trade and invest in this kind of market, well, let me just put it this way, you could lose a whole lot more than $7. And in this case, if you enroll in the class for $7 and you say, you know what, that's just not for me, I'll give you the $7 back. Because I'm confident that the class will blow you away. It is a ton of information, and it's all there for you to learn. So let's review. Enroll right now. You get the 2-day First Step class, the stock and options trading course just for you, unlimited access to the recording for a full 7 days, normally $1,495. You get it right now for $7, but you got to do it right now. Here's how you get signed up. Click on the link at the end of this class or go by seizetheday.com/buy. That'll get you in to the class that I just presented to you, a live 2-day class where you're going to learn how the stock market works, how to trade for pennies on the dollar, how to buy stocks for less money and sell them for potentially more money. All of that information contained in the live 2-day class, recorded and available online on demand whenever you want it at seizetheday.com/buy. $7 offer, ladies and gentlemen, and it's a money-back offer. Enroll today. Get started with your education. Learn about the stock market. Do it now before this market goes too much further. There is opportunity in every difficulty, but you have to have the right mindset and the right education to get it. We offer that to you. Ladies and gentlemen, it has been an honor and a privilege to hang out with you guys. I look forward to doing it again in the near future. Until then, I wish you all the success in the world. Godspeed, God bless, and we will talk to you guys at the next live First Step event.